Good evening. Ira Epstein with your SPDR ETF wrap-up for this Tuesday, the 22nd of February, 2022, 6:30 p.m. Central Time. Look behind me. It's a sea of red. You got like 3 markets or so, 4 markets that have some green, but everything else is basically in the red. It was a day of sanction talk. Not that many bad ones. I think the U.S. could have done a lot more to President Putin. I don't know what they're trying to do. You've got a dictator, a man that's gone over the deep edge, declaring countries on his own out of sovereign territories, and you're trying to leave the door open to negotiate with him. I don't know that that works. I think he's got to be punished more than we're doing. And I'm talking the U.S. Germany stepped up to the table. They said no on the Nord Stream 2. Forget it. While you're doing this, there's no chance of that happening. The UK really stepped up. 5 banks, major sanctions. 3 oligarchs getting hit. They'll find everything they own frozen at that point. And these are the first stages. This is nothing. We're going to move some troops around, so we're going to play pawns. You know, we're going to take our little chessboard. Okay, we'll take them out of Poland or some out of Germany. We'll move them up over here. Well, what's that going to do? They're going to NATO countries. The last thing that I envision at this point is the guts of Putin to attack a NATO country. That I don't think he wants to do. Then you open up the prospect of a nuclear war. A very different situation could develop. But to go against the breakaways that aren't NATO members, I think they're on his chessboard. He tried it in Crimea, and he's seeing what he did. And I think today what he basically did is what they said in the news. I was watching Lester Holt, and they wanted to know Putin's reaction to the sanctions from President Biden. He said, I didn't watch it. That's what I'd figure he'd say. Let's get rid of UUP. Write me tonight. Tell me other markets you'd like me to cover, and I will replace this and we'll rip that apart. It could be a stock, it could be SPDRs or ETFs. Don't give me those 2 and 3 times the value SPDR and ETFs that you want me to cover. I won't do it, but give me the ones that make sense, and I will. That's because most people don't trade those, and I want to be for the general person out there. One of the things I told you that I was scared of, and I think it's happening, is why isn't the dollar rallying in all this? I mean, it's got the biggest inflation story in 25 years, if not longer. It's not going up on that. Why isn't it rallying when we're drawn as a NATO member into a potential conflict, a major conflict with Russia, and it's not rallying on that? It's not rallying on fears of oil supplies. Remember, our administration's done a wonderful job of making us dependent on others rather than ourselves for energy. And that energy price, we still take a large percentage of oil from Russia. Has anybody told you that? Do you know that? We import every day oil from Russia. It's a secret. Nobody's supposed to know. So you take all these crazy ideas and you would think the dollar jump on it, and it's not. And you're seeing that here in the Invesco US Dollar Bullish Fund. Yes, the trend is up. Yes, the support's here. But I think you had to walk away from this today very disappointed. Until the trend's broken by getting under 25.48, nothing there. If you take that out, you could be in quick order down to the 100-day average. See the green? And the Bollinger Band. When we take a look at the daily setup, now that's the weekly setup, remember that. This is the daily, and look at how the market's just sort of drifting here the same way. Now the resistance, unlike support, is the 18-day average of closes, and bigger support under the market at this point is right here at 25.58, the 100-day average. But to get there, you'll be in a downtrend. You would have lower highs if you take out 20 to get to that number, 25.58. If you take out 25.61, you have lower highs, lower lows under a key average. That wouldn't be a pretty chart. So what you really have to do is you have to get up and over 25.75, stay up, not get back under today's low, and see if you can climb up to 26.01. I'm willing to bet you that what drove the dollar up here has none of the same bullish element as today's elements, and yet the dollar's not moving. And what I think the market did is the market was looking here saying interest rates. The dollar's going to rally because the U.S. is going to raise interest rates. Raise interest rates is beneficial. No, it isn't. We went from talking, will there be 3 interest rate hikes this year to 5 or 6. Today, one of U.S. big banks, I won't name them, 9 in a row. So we're going to get a 1/4 point in their opinion, maybe a 1/2 point every now and then, but a 1/4 point every month for 9 months. And you think that'll make the U.S. dollar strong? I say it'll cripple the economy. There's a number where you raise interest rates. I understand you're fighting inflation, but things get hurt. Keep that in the back of your mind. You really need a combination of supply chains filling, people with money in their pocket, raising of rates to curtail the inflation, and because of the supply chains, you have enough things where people aren't chasing things with their money they're not willing to pay up. That's the solution. I don't know how to get there. I'm not that smart. When I take a look at momentum here, up, trend up, the market is trying its darn best. It's 1 tick over the 18-day average, but I warn you, you don't want to start seeing this market give up ground here. It has to go now if it's going to go. Apple, if you get my paid ETF subscriber this morning, if you're one of those and you're seeing what I did at 9 when I start recording, I'm screaming in the mic. This is where you cover shorts. In fact, let me tell you what I was telling in my subscriber video. I don't mind telling you this. Cover shorts, cover shorts, cover shorts. As the markets were falling into Bollinger Bands, that's what I was saying. In XLF, lower highs, lower lows. Why is this still falling? This is the financial services. Aren't interest rates going to go up? Yeah. But the way the curve yield's going, it's inverting. It's 40. I think the 2 and the 10 are only, 40 basis points apart. It's not very far. You convert it, then what do? You're paying more to take in money than you're lending out longer term? It's weighing on the market. Just think of the logic of that. In Disney, okay. So Disney, to me, this is more of a correction than anything. I like Disney down the road here. I think a correction's a good thing. Yes, the market is feeling some pressure with the overall market, but here's what I say to you. Major League Baseball arguing. But spring training is beginning for the minor leagues. They're not locked out. Spring is coming. With spring comes the kids. The kids want to go to Disneyland. Disneyland's going to raise the prices. Air traffic, you're going to see books up. I think you want to keep your eye on these type of things. In the industrial sector, here was me again screaming cover shorts this morning. I said that back here. You rally to the 18, you're down here. Now the difference this time around is you're oversold. You weren't back here oversold. Oversold is a scary place, and that's even a better area. You're always thinking, in order for it to keep going, it either embeds, and if it doesn't do that, you got a problem. Oversold conditions correct by then, going sideways or rallying. XSD, trend down in the semiconductors. And I know everybody's telling me I want to be bullish on those semiconductors, and I was the biggest bull. But this sideways action now, it's back and forth. If it has legs to the downside, and that's a big if, I don't expect more than the lower band. I think that'll hold the market. If it reverses, I think it'll get caught here. What I think the market has done is it's made a transition. And I think the transition is into sideways action for whatever the next big move's going to be, and I doubt that move's here at this point in time. The home builders, are you watching the price of these homes? I mean, 18.6 or 7% today. The Case-Shiller number for January of this year versus January of last year. Who can afford these homes? And yet they're on fire. And guess what's going to be on fire? The cities. Everybody that was moving out now is going to want back in. You watch. Chicago, February 28th, the masks are gone. We'll keep it for probably public transportation and the kids in school for a bit. But you'll be able to go to a restaurant without that ID card. You're going to be able to go out and enjoy life. It's all changing again. So just keep your eye on that. Right now, there's a combination that's killing the home builder, and that's what this is, not the home seller, the builder. What is it? Inflation of every material that goes into the house, higher interest rates, but you have pent-up demand. That is the good news. Energy sector. Would you think, now watch this, this is so important. Just take a look at it. Market gets up. Why did it fail and close 1.6% lower? Whoa. So you got to understand charts and play with them. Gold. Gold, as it gets up to the Bollinger Band, it's getting sold. Now, not going short. The pros are dumping it, and they're buying it back, in my opinion. Doesn't mean I'm right. I think they're buying it back on the pullbacks because you have an embedded reading. There's a moving average here that I teach in my enhanced Bollinger Band course on the website that you follow. And until the red line closes back under 79, I think the market constantly is going to get bought here trying to grind it higher, not run away. On the other hand, you had a bad day today in the gold miners, but I understand it. Do you honestly think you're going to just keep staying over the upper Bollinger Band? No. So the market got the emotion of the Ukrainian situation. Everything jumped and it fell back. But as long as it develops an embedded reading, both numbers were over 80 today, over 80 on Friday, 80 the day before, and even the day before, I expect to see support on the market. Now, where the pros will throw in the towel, in my opinion, again, doesn't mean I'm right, is if the red line closes under 79 in the slow stochastic reading. Barring that, I think there'll be buyers on these pullbacks. The gold miners, not gold miners, the regular miners, the mining ETF. I'm not enamored with today's close. It did keep the embedded reading, but it made the higher high first. There's a trick if that makes the higher high first. I won't tell it to you. It's in the Bollinger Band course. This could be where the market starts weakening finally. And if it loses that reading tomorrow, I look for the market to then make an attack of that zone, looking for support. I'm not long-term bearish by any stretch. In fact, the opposite. But a correction could be setting itself up. Copper, it's in the correction mode. Right now, it's full-fledged in it. Lower highs, lower lows, momentum turned down. You might get what we call a break back to the major support of the 18-day average, about from where you're at now, 80 cents, 90 cents, to try to figure out what the markets could do. Actually, I think it's a little more than that. It's $1.20. I take that back. TLT. So TLT, in theory, should be dropping if interest rates are going up, but it's doing this. You ever hear of people nervous, so they're buying U.S. bonds and notes? That's what's been going on. But more important is this. As a technician, I'm not interested in figuring out, oh, today I'm bullish because of that. Oh, tomorrow I'm going to be bearish because this is happening. I want to do this. As a technician, and right here, if you lose the embedded reading, which you've done, you're probably going to make a run to the 18-day average of closes, and that's where the game starts anew. Last, the euro. The euro's flat. It's not going up or down, but I'll tell you, if the dollar can't go up at this time, and 40% of the dollar weighting is the euro, and it starts down, the euro's going up. Got to keep your eye on this. You're at a very important juncture, and that's what the market's saying. It is bearish going home, and until it loses that bearishness, c'est la vie. But I would have thought you had a lot more move coming right now. You know, if you go for our futures trading kit on our website, it's free to you. It includes one of the most popular tools that I think is being used today. This is what I call a trader's delight market. I've mentioned that to you over and over in this, especially in my futures updates. I've got 53 years in this game. 53 years, I'm a registered broker. And I can tell you when a market's a position market, day trader's market. I think I have that skill level. Holding my education on the trading floor, learn the game the hard way, watching all this, assistant to a lot of the best traders there were, and learn from them. But that's where you're at on some of this. Do you even know what a pivot point is or how to work with it? It's free. It's one of the few courses I make for free. It's in the Futures Trading Kit along with the Yearun Indicator, and these courses are video courses. You might want to take a look. The second thing, our charting software. I work in my charting software with a different set of variables than you do on slow stochastics. Try mine, see what you think it does. The next thing that happens is the time frame that we're in right now is very similar to what happened under Paul Volcker with this runaway inflation. And you don't think it's runaway? 7.5% in January. I'm looking around me at all these prices going up. I don't understand how February can be a less number. I mean, believe me, I am not an economist, but I'm paying more for everything. Heating, gasoline, my food in the store. I have no bills that I'm looking at that have gone down in price. Maybe you do. I don't have one. How could the inflation not be getting even worse? So I think you're going to be running into red hot numbers right now. And those red hot numbers means you got to learn what happens when the Fed gallops on these interest rates. I covered that with our money supply numbers called M1, M2, and M3, the cause and effect sheet. That's what it's called. You might want to look at that. It's all free. So if you'd like to see this, go to our website. It's under there in free offerings. Take advantage of it and enjoy it. I'm Ira Epstein. Remember, I need a new name from you. Let's get rid of this UUP and move on to another market now for the next 5 to 6 days. Take care.